Welcome to the Real Estate Guys radio program. I'm your host, Robert Helms. We know you've got a lot of questions about real estate because you send them to us, and today we're going to answer lots of them. It's another edition of Ask the Guys. Your questions, our answers, and we might have a surprise guest today on the Real Estate Guys radio program.
If you love real estate and have always wanted to own your own business, listen up. The Real Estate Guys and their panel of experts want to teach you how to go full-time fast in the real estate syndication business. These next few years may go down in history as one of the best times ever to acquire investment real estate. There are deals everywhere if you know where to look and how to assemble the resources. The Secrets of Successful Syndication seminar will show you how to make big money doing big deals from a team of experts that have syndicated projects totaling more than $1 billion. Don't wait for someone to give you a raise or create a job for you. Attend the Secrets of Successful Syndication and learn how to build a team, raise capital, find deals, and make full-time money in 6 months or less. Go to realestateguysradio.com and click on events. All the big players use syndication as a way to diversify risk, optimize profits, and earn big money. You can too. Go to realestateguysradio.com and click on events.
Welcome to the Real Estate Guys radio program. I'm your host, Robert Helms, and joining me, as usual, our co-host, financial strategist Russell Gray.
Hey, Robert.
We love to get awesome guests on the show. We've had some of those in the past few weeks. We've got some more coming up. But today, our favorite guest is you. It's another edition of Ask the Guys. Your questions, our answers. And pretty much every day we get questions from listeners about all kinds of things. Some are too specific to answer on the show because they just relate to somebody's situation. But there's always some great ones we think that folks will benefit from hearing the answers to. So that's what we've got for you today. And we may have a special guest before we're done. Here's how it works. You have a question for the Real Estate Guys, all you have to do is go to the website at realestateguysradio.com. You'll see the button that says Ask the Guys, and then send us your question, and we go through those and pick out the questions to answer on the show. We only have two caveats. The Real Estate Guys are not legal or tax professionals, so we won't give you any legal or tax advice. And then the second is, we don't give advice at all. We basically will give you ideas and information. If you want to turn it into advice, then seek the counsel of a professional. With that out of the way, let's get to question number one. This comes from Krasimir in Aspen, Colorado. Hello, guys. My name is Krasimir, and I'm an aspiring real estate investor. In the past couple of months, I've analyzed over 100 deals in the market that I've chosen to invest in. What are the best ratios to analyze a real estate deal, and why? Well, that's a great question, and I thought we'd start with that because beginning investors especially get a little overwhelmed by all of the metrics and the formulas that seasoned investors use. And at the end of the day, real estate's not that complicated. You know, we get the reports, annual reports from companies that are tech companies, and we look at all the different ways that they have to calculate, all the returns. And real estate's pretty simple. The basic premise is you buy a house, somebody lives in it and pays you rent. Or an office building or a retail property, and it can get more complicated. You look at a 200-unit multifamily, but it all boils down to just a couple of important metrics. I think to discuss those, let's toss it to the financial strategist.
Yeah, actually, the math is really quite simple. There's three basic numbers. The back of the napkin one, when you're just looking at a market from a distance, is pretty simple. It's called a gross rent multiplier. You take whatever the rent is and you multiply it times, if it's monthly rent, times 12, and you get a number, and you divide that number into the price. So if a property is generating $10,000 a month of rental income, $833 a month, and it's a $100,000 property, it's a 10 GRM. Now, that doesn't really mean much in the real world, but it is the beginning of a cut. And when you look at the pricing, you're like, okay, that's a go, that's a no-go. And you can compare one market or one neighborhood or one property to another using that.
Now, you may have heard another way that we express that. And this is not a rule, but everyone calls it the 1% rule, which basically says that if the property will rent for approximately 1% of its purchase price, then it might be a good investment. All that is gross rent multiplier on a monthly basis. So in that case, it's just the first cut. As Russ said, it's not magic, and it can vary by market.
And then the next one that professional investors use is the cap rate. And that one is a little bit different. You have the net operating income, which is the gross rents minus all of the expenses except the mortgage. And you get net operating income. You take that and annualize it and divide it by the purchase price, and you're going to get a percentage. And the higher the percentage, the better the deal is. The lower the percentage, the less the deal is. It's just like what your rate on a passbook savings account. If it's 1%, that's not as good as if it was 5. Now, of course, if you're selling, it's the other way around. But if you're a buyer, you're going to take a look at cap rate. But of course, what that doesn't take into account is the mortgage. So the next and probably the most important one is going to be your before tax cash flow. So now you're going to take your net operating income and you're going to figure out how much debt you're going to put on the property. And at today's rates, what that mortgage payment, principal interest is going to be, and then you're going to figure out what your before tax cash flow is. And if that number is solid and you feel like you've got a little bit of wiggle room, meaning that you make enough money to pay the mortgage and a little bit more, most lenders are going to require something around 1.2, maybe 20% more, somewhere in there. It depends. If the number goes up, that means lenders are feeling a little bit skittish about what the direction of the market. If the number goes down, it's a little bit more aggressive. But doing the math on a property, that's the simple part. To me, the real underwriting is the market and the mortgage. What you see people getting in trouble in right now is they buy a property that looks good on paper by the math, but the market is sinking. The demographics are bad and worsening. The migration trend is bad and worsening. The local economy is bad and worsening. And if you don't underwrite that, then you catch a falling knife. The corollary to that is the mortgage. A lot of people are in trouble right now because they use short-term financing thinking rates would be low forever and lending would be available liberally. And now we don't have that. And so they're having a hard time, even though the property might have made sense by the cash flow. It might have made sense by the market, but they don't have sustainable financing. So if you have to pick something that you're going to really focus on to get good at underwriting, yes, you have to know how to do the math, but make sure you know how to underwrite the market and the mortgage.
This is such a good point because the analysis that you're talking about here, Krasimir, is just the first step. Does it look good on paper? And frankly, if it doesn't look good on paper, then you can stop right there. But the minute it looks good on paper, that's not enough. Now you really do have to not just look at the market, the sub-market. We've been out in markets with our providers. Those are folks that really know the areas well. And they'll say, hey, on this south side from this street, stay away from there. The other side, though, is good. Like, how would you know that without living in the market? So it is important to start with the analysis and then go from there. Now, you'll also hear this term IRR, internal rate of return. This is a little bit of a confusing term. We use different terminology at the Real Estate Guys for it. We just call it total return because what IRR considers is all of the ways that you make money in real estate. And we like that. Over the time that you own a property, you're going to make money in lots of different ways. It's not just the cash flow. That's going to be important, but hopefully, if you pick in the right markets, the property is going to go up over time, either because the market did that for you or you're going to make decisions and maybe do improvements that get the value of the property up. You're also going to have the potential for tax benefits. And again, we're not tax professionals, but there's a lot of tax benefits available to retail real estate investors. And then finally, the amortization of the loan. The loan that Russ talked about is critical, but recognize that if you have anything but an interest-only loan, if it's amortized, every month your tenants make the payment, they're paying down part of the principal. So that adds to your balance sheet. So it's not that it's super simple, but it's simple enough for people to understand. And the basic income formula is just taking the income less the expenses, not counting the debt service. That's how you calculate the cap rate. And cap rate is important because it lets you compare, say, a real estate investment to other types of investments. But from there, you want to look at your total return or IRR.
Yeah, the other caveat about that total return is that two affect your cash flow. One is from income versus expenses. And if it's positive, you have positive cash flow. And that's the most important thing because that's how you stay in control. That can be enhanced typically depending on your tax bracket, current tax law, and what you can take advantage of by tax breaks. The other two are on your balance sheet. One is amortization, which is a buildup of equity because of the pay down of the loan, and the other is appreciation. But that doesn't help you control the property. And so the challenge that people have is when they look at the total return, and the total return is great, but it's heavily weighted on the balance sheet and the cash flow is very thin. And then they don't have the ability to withstand a decrease in rent, an increase in expenses, and they lose control of the mortgage, which means then they lose control of the property. And even worse, they lose control of the equity or the down payment that they put in it. So cash flow is number one, by far, the single most important thing to pay attention to when you're controlling a property with debt, because if you get it wrong, you lose everything.
Which is exactly why I wanted to start with this question. Some of you that listen and have listened for a while, you understand the metrics. You've been through this, but there are definitely some nuances that we like to talk about so that you can put that all in perspective. And here's the other thing, Krasimir. The fact that you have already analyzed 100 deals before investing, that's building up a muscle. That's a great practice. Even when you're not actively looking for a property to buy, say you just bought a property and it's going to take you a while to save up some more down payment money, you still got to keep your head in the game. Don't just forget about the market and the property because you have a property manager taking care of it. Get out there and make sure you're watching the market, looking at other deals, similar deals that come by. It lets you spot trends early. It lets you see where there might be opportunity. Great question. If you have a question for the Real Estate Guys, all you have to do is go to the website at realestateguysradio.com and click Ask the Guys. This next question comes from Jessica in San Antonio, Texas. Hey guys, my 18-year-old son and I are getting involved in real estate. Well, that's awesome. I'm sorry we missed the goal-setting event in January. We just heard about it, and we definitely want to attend in 2025. What other events do you have in 2024 for my 18-year-old to begin his education? Well, that's a great question, and we love this question because a big emphasis for us is finding paths for the next generation. We were both fortunate enough to invest early in our lives, and that's been great on so many levels. Russ has been through several of his children learning to invest and investing. My son is 18 right now, and we are on this very same journey. So there's a big soft spot in our heart for youth. As trite as it sounds, the children are the future. So let's talk about some of the ways that you can get young folks involved. The first thing is you've got some level of knowledge. You say your son and you are getting involved, which would tell me that you're not to the point where you can teach him everything he needs to learn, which is actually a great thing. As much as we love to help our own children, we're just their dads, so they don't really pay that much attention to us. In fact, when my son was 16, he sat me down and said, "Dad, I want to talk to you about something, and I don't want you to be mad," which you worry about when they're 16. And he says, "I don't think I want to go to college." I'm like, "Okay, why's that?" And he said, "I just have friends that have been in college for a couple of years and they aren't really digging it and they don't see a big potential for their future. And yet when I go to our events," and he attends many of the Real Estate Guys events, "we meet so many people that are doing so well in real estate. Wouldn't it be dumb of me to not invest in real estate?" I said, "Well, I don't like the dumb word, but other than that, 100%. And Russ, you've gone through that with many of your kids. They come along at their own pace. You reach them where they're at, but as soon as they express an interest, then you want to get them exposed."
Yeah, I think that it really is going to come down to not events, Jessica, at least not the way you think of them, because a lot of times we think events are about education, and they're not. They're about relationships. The reason you go to an event is to meet people, to see people. The very fact that, in this case, Ethan is inspired by seeing other young people who are doing well in real estate, that is what he sees at an event. It's not what he learned, it's who he met, it's what he sees. So you want to get involved in as many events as you can. We've got a few things. We've got our annual investor summit, and on that summit, we have a young investor program. So we have a subsidized rate and a scholarship program even for young investors 18 to 25 years old that want to come be a part of that. They hang out with other young people, up to 25 or 30 other young people, many of whom are doing quite well. And it begins that process after a week of this summer camp, if you will, together with other young investors. They build relationships, they stay in touch, they begin to mentor each other, study together. You'll get more done in terms of building those relationships in a week than most people would get done in a year or longer of going to local meetups and whatnot. So that's something to consider. The other thing we're working on in a new venture we've got going with George Gammon, Kenny McElroy, Jason Hartman, is in Collective Inner Circle is a young capitalist program. And we don't have that ready to go yet, but stay tuned because that's going to be coming out. It's the same thing. It's not really about real estate investing. It's more about business and life and just being excellent in all the ways that matter and getting around other people that have achieved a great deal of success in different areas of their life. So we're super excited about that. And then we have our Secrets of Successful Syndication seminar coming up. And this is really about syndication. And the reason you would want to go to a place like that is first to be able to see past your beginning investing career. What happens next? What happens after you've deployed all of your capital? You're fully invested. Now what? You're just sitting around watching paint dry. Syndication is about going to the next level. So anybody who is ready to go to the next level, that's the natural progression. For a young person, it's the opportunity to meet people that they could potentially intern with. There's a lot of work that needs to be done for a professional investor who's deploying millions and millions of dollars of capital. And a lot of that work can be done by a young person who's looking to put themselves in an environment where they're going to be around where the action is. So those are the things we've got going. Other than that, I think get involved in local investor meetups, investor mentoring clubs, or whatever types of groups you have. Listen to podcasts together, study, put together a study group, read books together, study. Ken McElroy's got a great book, ABCs of Real Estate Investing. Start with that. Don't just read it. Study it together. Discuss it. Invite other people to that conversation. You'll find you'll learn a lot better and a lot faster.
Well, because you've also mentioned that you're getting started, at the very least, if the two of you read a book independently, then come together regularly and discuss it, you'll get an extra oomph. But beyond that, does your son have friends that are also maybe interested in business and money in their future and maybe real estate? So a book like Kenny's can give them a great starting point to understand what real estate investing looks like. And then you have these active discussions. And there you can share things like other book recommendations, podcasts that people are listening to. Kids are amazing. They are sponges for knowledge, and they will pick up more than you can even imagine. What I do with my son is I just have him hang around. When I go to a lot of conferences that I'm speaking at or other people are hosting, and when I can, I bring him, and he gets to soak it in as well. And then afterwards, we talk about it over dinner. Hey, what did you learn today that was really impactful? Or was there something that you heard that you didn't understand? And then we can talk through that. So you're on a great path. And for everyone out there who has a young adult in their life, whether it's a child, grandchild, niece, nephew, definitely consider the Investor Summit at Sea. We're going to be back on our cruise ship in June, and we've got a bunch of spots still left. The majority of the young adult spots are taken, but there are spots left right now for someone 18 to 25. And the cost is less than the actual cost to put on the event. That's the subsidized part. And even if you can't make that, well, you can apply for a scholarship. That window is closing, though, so you can get all the details on the website where you see the button that says Summit. That's our Investor Summit at Sea. It's Ask the Guys today. Your questions, our answers. We've got lots more coming up next. You're tuned to the Real Estate Guys radio program. I'm your host, Robert Helms.
Live nationwide, you're listening to the Real Estate Guys. Find out more at realestateguysradio.com.
Real Estate Guys listeners, are you tired of losing real estate deals due to financing issues? Have you had enough of waiting on banks, lenders, and investor groups to fund new projects? What if there were a way to eliminate all the hassle and invest in real estate on your own terms? I'm here to tell you there is. Patrick Donahoe here from Paradigm Life. I'm an Investopedia Top 100 Most Influential Financial Advisor, and I recently wrote a best-selling book about the financial strategy that changed my entire investment model, and the one that could change yours. To get a copy of my book for free and learn how you can maximize your real estate portfolio by acting as your own bank, send an email to mybank@realestateguysradio.com. Don't make another real estate deal without reading my book first. Email mybank@realestateguysradio.com now to get your copy for free.
When it comes to successful rental property investing, it pays to be picky. Pick the right markets, pick profitable properties, and pick great property management. That's easier said than done, but we've got great news. Jerry Kerr and his rockstar team at Mid-South Homebuyers are going strong in Memphis, Tennessee, and Little Rock, Arkansas, too. So for a top-notch turnkey single-family home rental property, whether you're a new investor or have a large portfolio already, pick Terry Kerr and Mid-South for a truly A-plus investing experience. To learn more, send an email to midsouth@realestateguysradio.com. That's midsouth@realestateguysradio.com.
Hi, everyone. This is Jim Rickers, the author of The New Case for Gold, and you're listening to The Real Estate Guys.
Welcome back to the Real Estate Guys radio program, now in our 28th year. It seems like only yesterday we came up with this idea to talk real estate on the radio, and here we are. It's Ask the Guys. Your questions, our answers. Our next question comes from Severio in Bronx, New York. All right, from the Bronx, he says, guys, are there real estate mutual fund programs that invest in properties? And can I access them through a brokerage account? All right. Well, Severio, the answer is yes. There are lots of ways to get exposure to real estate. Most of the folks that listen to our show are probably in the camp of wanting to live below their means, put some money aside, come up with a down payment, buy a property, either to just buy and hold or maybe to fix it up and add value to it and build their real estate empire. But if you're a busy person with a crazy life and you just want exposure to real estate, there are several ways that you can get exposure to real estate in the public markets.
Yeah, there's real estate investment trusts, which is probably the likely candidate, but you won't have a difficult time finding those. So the short answer to your question is yes, but I'm going to put a big but behind that. Some things to think about. Publicly traded stocks are often priced on momentum rather than fundamentals on a philosophy called buy low, sell high. And if you really think about what real estate is, it's a long-term play based on cash flow and then equity happening over time. And so when you're in a buy low, sell high environment, and these publicly traded stocks are being used as chips in the Wall Street casinos, there's a little bit of price volatility. But the other thing is very difficult to tell for a layperson whether these things are priced right or not. And so if you're going to do it, make sure that you understand how to analyze the stock. It's really about dividend yield or how much cash flow is it going to throw off. So the other thing is you want to underwrite the management. When you're looking at a managed fund, any type of managed fund, then really you have to look at what Robert would call the jockey, who is actually driving the ship, to mix metaphors. So you want to underwrite the management as well as the portfolio. And here's where the track record is a little bit interesting, and they should have a track record. But this is really a brand new market, and we're old enough now that we realize there are people who are professional money managers that have never managed through a downturn. 2008, which we talk about like recent memory, is over 15 years ago.
Right.
Now it's people are like, really? 15, 16 years ago, there are people that were in college that are now running funds that have never experienced that kind of a downturn. And so I think it's really important. We talk to Ken McElroy a lot, and one of the things that's happening is some of these newer managers in the Main Street space, in the syndication space, are having a tough time in today's market because they've never seen a credit market difficult like it is right now because of the way the Fed aggressively raised interest rates. So just make sure that if you're going to move into a momentum area where there's a lot of speculation on buy low, sell high, it's really easy to buy the hot stock, whatever it is, real estate or otherwise, when it's priced too high based on the fundamentals. Guys like Warren Buffett, who are famous investors, they don't invest in momentum. They invest in sound underwriting, fundamentals. Is the company profitable? Is it producing a good return? Is it well managed? Does the management team have experience going through difficult times? And whatever price I'm paying for, is that a good price or am I overpaying? And if you can answer those questions, go for it. Personally, I think you probably be better off on Main Street, but that's definitely a prejudice that I have, and I'm unashamed about it.
Well, when we talk about real estate investment trusts or REITs, those can be private, but most of them are publicly traded. The one advantage to REITs is that they are generally segmented by market or product type. So there are healthcare REITs that own hospital buildings and surgery centers. There are multifamily REITs that own apartments in areas and markets that they've decided make a lot of sense. There's all kinds of different ways to get exposure to real estate. They are publicly traded stocks. stocks. So that comes with the pros and the cons. One of the big cons to those has to do with taxation. Again, we're not tax professionals, but the tax code in the U.S. and many, many other countries gives incentive to individual investors to invest in real estate. And because of that, we get to write off a tremendous amount. Now, when you make money in the stock market, you don't really have much of that protection. So that is a thing to consider. But there's a couple of other ways to get public market exposure and even some private market exposure to real estate without having to go out and buy a house and find a manager and get a tenant. You could invest in, say, home builder stocks or stocks of companies that are in the business of real estate. And that's a way to get some exposure. One of our favorites is actually something called a private placement memorandum. And that is a bigger deal that gives you exposure to real estate where you don't have any of the responsibility either to do any of the work or to qualify for the loan or any of that. So these are great vehicles to pick markets and types of real estate, and then those operators, those jockeys that Russ was talking about. It's a little more difficult because they're not publicly listed. They're not in a brokerage account. You have to go and forage into the world and make some relationships with these people, but they're easy to find. I would say the best possible place to start is to come to the secrets of successful syndication. Syndication is the art and science of putting together private placements, these types of private investments for individuals that have a far less friction. They don't have those market momentum issues that Russ talked about generally. So most of the people that come to our syndication event, which we do twice a year, are interested in becoming a syndicator, a fund manager. But I think it's an excellent event to attend as a passive investor who likes the idea of being exposed to early market deals, but doesn't have the time to do all the work. You can find out more by sending an email to syndication@realestateguysradio.com, syndication@realestateguysradio.com. It's Ask the Guys. Your questions, our answers. The next question comes from Tamara in Las Cruces, New Mexico. Hi, Real Estate Guys. Looks like your annual investor summit is back on a cruise ship this year. How much time are you doing seminars and how much free time is there? That's a good question. Also, the pricing is a little confusing. We're thinking about bringing our kids who are 8 and 11. Can you help me understand the costs and what speakers are coming? All right. Well, we're excited that our 22nd annual Investor Summit is coming up. We won't turn this into a big commercial for it, but I will say that it's going to be June 13th to the 23rd. It's on a fabulous cruise ship. I just had a chance to be on that ship for a day just to see it between sailings, but it was between the first and second sailing, and it's absolutely awesome. And the pricing is based on the cabin type, whether you want an interior cabin or one with a window or one with a balcony or a bigger suite, and the number of people. Kids are absolutely welcome, and one of the great things about the cruise ship is they have a kids program, and your kids are right at that age where they will have a blast, and you'll be able to be in class. Now, let's talk about that. There's over 40 hours of class time during the Investor Summit, but it's all optional. You'll get a schedule at the very beginning of the week, and we don't do it before that because we let the speakers decide what they want to talk about right before they get on the ship, and you'll have a chance to pick and choose the topics and the things you want to learn about and who some of the speakers are. And we have amazing speakers. We have Peter Schiff back with us. Ken McElroy's with us. We have George Gammon coming. We've got Brian London. We've got Tommy Hopkins. We've got amazing, amazing folks coming. But you may not be interested in everything everyone has to say, so you can pick and choose. Maybe there's some time you want to spend with your kids. We'll have 3 port days. And on those days in Aruba, Bonaire, and Curacao, you can go hang out with your kids and have a good time. The real unique aspect of the summit, there's 2 things in my mind. There's the fact that we can all go listen to Peter Schiff's podcast, but where can you hear Peter Schiff on a panel with Ken McElroy talking with Jason Hartman, right, all together? So we do a lot of these panel discussions, which are absolute gold. And then you get to have dinner with these folks. Every night we assign the seating, so you're sitting with different people from different parts of the world, different faculty members some nights, some of the young adults that we have on the program. So it's a really great way to get immersed into just a learning environment, and it is like networking on steroids. So if you want more information, you can go to investorsummitatc.com or just easily send an email to summit@realestateguysradio.com. It's Ask the Guys. Your questions, our answers. We come back, we'll play real estate trivia next. You're tuned to the Real Estate Guys radio program. I'm your host, Robert Helms.
Real estate investment advice right in your mailbox. Sign up for the free Real Estate Guys newsletter at realestateguysradio.com.
All aboard. Registration is open for the Real Estate Guys 22nd Annual Investor Summit. Imagine spending more than a week with like-minded investors, world-class educators, and real-world professionals. Returning in 2024 is the editor of the Gold newsletter, Brian London, real estate developer Beth Clifford, and the rebel capitalist George Gammon. Back with us in 2024, sales legend and best-selling author Tom Hopkins. And joining us live and in person for his 12th Investor Summit, Ken McElroy. Plus 2 brand new faculty members we can't even mention yet, and a lot more. It all begins June 13th in Fort Lauderdale, Florida. Visit investorsummitatc.com to get all the details and reserve your spot. This transformational week is like no conference you've ever attended. Go to investorsummitatc.com and make plans to spend a week with the Real Estate Guys, Ken McElroy, Tom Hopkins, and an all-star faculty on the 22nd Annual Investor Summit at Sea.
Hey, this is Peter Schiff, and when you're not listening to me at schiffradio.com, make sure and listen to the Real Estate Guys.
Welcome back to the Real Estate Guys radio program. We're so glad you've tuned in today. Are you looking for a new and different real estate market? Well, come join me in July as we discover beautiful Belize. We'll have a fabulous time together, have some tremendous food, meet some awesome people, and learn about the investment potential just a little offshore. Lots of reasons to diversify your portfolio. For all the details, go to the website at realestateguysradio.com under the tab that says Events and Live Events, where you'll find the Belize Discovery Trip. It may be time to put paradise in your portfolio. It's Ask the Guys, your questions, our answers. Before we get back to those questions, it's time for us to ask you a question as we play Real Estate Trivia. It's your chance to win a prize by knowing today's Real Estate Trivia question. The question will have something to do with real estate. As soon as you think you know the answer, send your best guess to trivia@realestateguysradio.com. Trivia@realestateguysradio.com. You'll need to send us your name, the answer to the question, and your physical mailing address. The first person that gets it right gets this awesome book called Whatever You Are, Be a Good One. It's a cool compilation of 100 inspirational quotes compiled and illustrated by Lisa Congdon. That could be yours if you know today's real estate trivia question. Last week on the program, we had the co-founder of RE/MAX, Dave Leniger, with us and asked this: how many times will the average American move in their lifetime? Well, on average, a U.S. citizen moves 12 times during their life. Here's our real estate trivia question for this week. In which U.S. state would you find the largest pitcher of sangria ever made? Yeah, seriously, there was a time when the largest pitcher of sangria was made, and local folks made a big deal about it. What state was that in? If you think you might remember, or you just want to guess, either way, send us the answer to trivia@realestateguysradio.com. Trivia@realestateguysradio.com. Give us your name, your guess, and your physical mailing address. And the first person that gets it right gets whatever you are, be a good one. That's today's real estate trivia question. It's Ask the Guys, your questions, our answers. This next question comes from Christy in Knoxville, Tennessee. Hey guys, thanks for the great show. Well, thank you, Christy, for the nice compliment. As a new real estate agent, I'm looking for some suggestions. With inventory low and interest rates up, it seems like a challenging time to start my career. What are some ways agents can stand out from the competition? Well, I'll tell you, we love real estate agents, love them. And you need a real estate agent that knows investment property if you're going to invest in, not just somebody that's selling houses. But if you're in the house selling business, it's a tough time right now. You're right. Interest rates are up and there's not as much inventory out there. But you can stand out from the crowd. And Russ and I have a lot of thoughts about this. But I thought it'd be really awesome to bring a guy who taught both of us many of these very things. Let's welcome to the Real Estate Guys radio program one of the most awesome sales guys on the planet, Mr. Tom Hopkins. Hey, Tommy.
Hey, Robert, and all the Real Estate Guy champions. Yes, well, it's so nice to have a chance to share some ideas and stuff with you. The top producers I've ever met, they are fanatics on keeping in touch, meaning once they get a possible lead, a person that maybe sometime in the future, maybe not right away, but will do business with you, you must not only start the thank you note. The handwritten thank you notes are more powerful today because no one's doing it. Everybody's sending them a thing electronically. I really believe that the handwritten, personalized little thank you note has more power today than ever because no one else is doing it. Because that's really how you get the business. And you keep the business away from your competitors if you're there more often, and of course, give more service than people expect. And I've always learned over the years that if you make that a thing you live with, give people more than they expect as far as service, follow up, the niceties of keeping in touch, and you'll build a long-term relationship and have that client for many, many years, which is what our goal should be.
Well, it's one of the things I learned early from you, Tom, is that when you first meet someone, a prospect, and you stay in touch and eventually you're able to serve them, that if you do it right, you're setting the foundation for a long-term relationship. That client might move 3, 4, 5 times. And in our instance, selling real estate, well, then you're going to be the person that can help them out. And as you always point out, it's not just them, it's the people they know. And when you do a great job and you stand out from everybody else, then you get those referrals. And one of the things I've loved about your teaching over the years is that you start from that point of view, that you need to service the client's need today, and that's what the follow-up is about. But ultimately, the whole time, you're going to be doing such a good job that they can't wait to refer you to their friends.
Well, and this is true. And I found after my getting started really doing well in the business that I didn't have to hardly ever knock any doors anymore. I didn't have to do much canvassing because people were sending qualified, nice people to me. It's almost like we have to prospect our way out of ever having to prospect. It is a matter of numbers until you prospect your way out of having to by building a referral base, by having a reputation not only in the community, in your industry, to where people say, this person really does a great job. And I have no challenge in referring friends and relatives to them because I know they will take good, ethical, and honest care of my friends and relatives. And that's, of course, how you build that long-term business.
I love that. Now, Tom, you've been not only in business, but as an investor for many, many years, and ups and downs and changes and high interest rates and low interest rates. Obviously, one of the things that people are concerned about today is interest rates are back up. But compared to where they've been during your lifetime, it seems like interest rates are almost on sale, right? I mean, you were buying property when it was double-digit interest rates.
Yeah, I remember we had 1 year where our average home loan interest rate was 18%. And we still did well because I think if you have the right attitude, lots of quality activity, again, follow-up specialists, if you do all these things and have a constant activity level, you're going to keep doing good business. Many people, the market gets slowing down, so they slow down, where the champion does just the opposite. If things get tight, you put in a little more effort. You make more contacts, knock on more doors if that's what you do. And one of the companies I work heavily with is called Knockstar. And these people, all they do is go out in the street and knock on people's doors, marketing their solar for the house. And they're doing extremely well. Every morning they're out, they do 3 to 4 hours of constant door knocking. And that's how this little company of about 35 people is just knocking the heck out of the income on solar in their communities because they're doing what most people don't want to do, eyeball to eyeball contact. And that, of course, is how I built my business, knocking on doors. And it was almost a life-changing event when my manager after 3 months of me sitting in the office, put me in his brand new Lincoln car and drove me up to a residential neighborhood, pulled over. I said, "What are you doing?" He says, "Tom, you've been sitting in the office, and that's not where you're going to make any money. You've got to talk to more people. So get out of the car. We're 3 miles from the office, and you've got to walk back. So why don't you just knock on all these people's doors coming back, let them know you're in real estate." And then he said something, Robert. He said, "I promise you, Tom, for every 100 doors you talk to people, you'll find one qualified person that'll give a listing on the home or will buy a home from you." And of course, as he drove off, I cursed him. I was so mad. But long and short of it, I knocked on 64 doors. And the 64th door, the man who opened it said, "Are you in real estate?" I said, "Yes, I have a real estate license." He turned around and yelled at his wife, "Honey, come to the front door." And I was a little nervous. "What is it?" And she came to the door and he held my card up. He said, "This young man is in real estate and here's his card." She said, "Please come in." And I was nervous. "What?" She says, "Last night we received a call from the company he works for, my husband, transferring him in a week, leading myself and the 3 children to sell the home. And we got on our knees and prayed that God would send us a realtor. And here you are." I laughed. I said, "Yes." And I went in and I took the listing and helped them get moved. And that was really the first example of the truth of getting out, talking to strangers, overcoming your fear of possible rejection, knowing you're going to get told no, but the yeses are all hidden behind the no's. So get to the no's and the yeses will be there. And that's where your money is. Go for it.
Love the attitude. You know, so many people would rather just send off a mailer or an email.
Sure.
But when you knock on the door, it's a whole different reality. And yeah, it's a little daunting and maybe a little scary at first. But once you get the hang of it, right? You know, my boys are both in scouting, and a lot of times we'll be at a display where we're selling the Boy Scout popcorn at a grocery store, or we go door to door, and we got to teach them. They got to prospect. They can't just stand back. They have to walk up. And it's so fun watching the little kids at the beginning. They're so scared. But once they get a sale or two, man, they're right out there. And I think that's for everybody, right? Activity breeds activity.
That is so true. Well, that's wonderful. Well, Robert, listen, I love always visiting and chatting with you. And all of you, I hope you get an idea or two from our message. And until I see you, my dear friend, all the best.
There's the amazing Tommy Hopkins. Hey, it's easy to find all of Tom's fabulous books at your favorite bookstores or online, and I can't think of a reason why you wouldn't want the entire collection. And Tom, we're super thrilled that you and Michelle are coming back on the 22nd Annual Investor Summit at Sea.
Oh, I can't wait. That cruise is going to be so great. We loved it, and we're going to have a blast. So, yes, we'll see everybody that's going on the cruise. We'll be there. And we'll be sharing and spending a lot of good quality time.
Thank you very much. There's Tom Hopkins, ladies and gentlemen. More when we come back. You're tuned to the Real Estate Guys radio program.
Need help with your real estate investment portfolio? Check out the resources page at realestateguysradio.com.
Self-storage is an asset class that has stood the test of time. Going into the Great Recession of 2008, self-storage had the least negative impact of any of its commercial real estate peers, and it had explosive growth coming out of that time during the recovery. Fast forward to 2020, and you'll see that same pattern during some of the worst part of the pandemic. Hi, my name is Dave Zook, founder and CEO of The Real Asset Investor. Our operating partners are some of the best in the business, and we've had great success over the last decade buying mom-and-pop operated self-storage facilities and taking them to the next level by forcing value through increasing the square footage, adding climate-controlled units, bringing in our professional management teams, and turning the project into an institutional target. We have self-storage investment opportunities available for accredited investors who are interested in investing in this space for cash flow, tax impact, and huge equity appreciation. Reach out to us today at self-storage@realestateguysradio.com.
For thousands of years of human history, silver has been recognized as money. Then in 1965, the United States took silver out of the financial system. But did silver stop being money? Smart investors don't think so. And ever since, when there are concerns about the quality of the currency, alert investors seek shelter in silver and gold. As the size and frequency of major financial crises grow, silver is attracting a lot of attention. To help better understand the what, why, and how of silver, watch the free 9-part series, Making Sense of Silver. Everything you always wanted to know about silver but didn't know to ask. Featuring 30-year precious metals veteran Dana Samuelson. Send your email requests to silverseries@realestateguysradio.com. Whether you own silver now or you're wondering if it's too late, email silverseries@realestateguysradio.com.
Hi, this is Mike Maloney, author of The Great Gold and Silver Rush of the 21st Century, and you're listening to The Real Estate Guys.
Welcome back to the Real Estate Guys radio program. Thanks for tuning into the show. Hey, if you'd like to do more with your real estate career, maybe turn it into something awesome like raising private capital, then come on out to the Secrets of Successful Syndication. It is right around the corner in Dallas, Texas. Get all the details on the website under events or send an email to syndication@realestateguysradio.com. We hope to see you there. It's Ask the Guys. Your questions are answers. First of all, awesome to hear from Tommy Hopkins.
Yeah, Tom's a legend. He actually saved my whole career because I was floundering in sales, and a fellow sales rep in the office I was in had mercy on me and loaned me his How to Master the Art of Selling tapes. Back then, cassette tapes in the 1980s by Tom Hopkins, and I must have listened to those things 100 times. In fact, I dubbed them, so I stole the IP, which I felt terrible about. When I first met Tommy, I confessed my sin, and I had him sign all of the cassette tapes that I had gotten as a memento. And of course, you know, we've since become good friends. He comes on the summit every year. He and his wife, Michelle, and I get together from time to time because we live in the same area. So he's just a great, great guy. And the thing about Tommy, his techniques, his attitude about life, it's timeless. It doesn't matter. He's been around. He's been through up markets, down markets, high interest rates, low interest rates. He's been through different economic situations. And at the end of the day, he keeps a positive attitude. He goes out every day. He works on the things that are inside his control. Then good things happen. And a lot of times, just not even knowing that there's bad stuff out there, you don't even know. When I first started my sales career, I didn't even know we were in a recession. I didn't even know what a recession was. I just knew I had work to do, so I got up every day and worked. And a lot of people were sitting out waiting for things to get better. And my advantage was I worked anyway. I didn't know. And I learned that from Tom.
Tom is the guy that also walks his talk. Years ago, when we were rekindling our relationship with Tommy, we had him on the radio show and we invited him on the summit. And in between was our Create Your Future Goals retreat. And Tom and Michelle came to the event, stayed the entire weekend. In fact, I have Tom Hopkins in the audience. I just have to bring him up. On Friday night, I asked Tommy to come up, and he was masterful. He only spent about 10 minutes. He's so good at reading a crowd. He gave him some really awesome ideas to think about, and then he knew it was time to sit down. It was beautiful. Anyway, I tell that story because at the very end, we say our goodbyes, off they go. We're ready to clean up our big seminar room, and I've got my little desk area, and sitting there right in front of my computers is a handwritten thank you note from Tom Hopkins. I'm like, oh man, like he really, really believes and practices his stuff. And talk about a successful guy. Come on the summit so you can have dinner with Tom Hopkins. I mean, he's just an extraordinary dude. All right, big thanks to Tommy for hanging out with us today on the spur of the moment. This next question comes from Josh in Baton Rouge, Louisiana. Hey guys, love the show. My wife and I attended the Goals Retreat, which was awesome. She's a member of the Syndication Mentoring Club, and we're eager for the syndication events coming up. Our question, is it better to gain experience with personal investments first, using our own cash to establish some credibility and a track record, or should we dive into syndication right away? It seems we could use our capital to set up business systems, a podcast to reach passive investors, and fund educational seminars instead of investing our own money into more direct deals. But it also seems like we need to get more experience under our belt before someone can trust us with their money. We have 2 rental homes currently that do quite well, but our aspirations are to go big and raise money for private equity funds. Thank you, Josh. Josh, this is a world-class question, and it's like, what comes first, the chicken or the egg? So most of the folks who are interested in going to that next level in real estate, and that's not the majority of people. The majority of people are just going to own a house or 2 or an apartment building, and it's going to supplement their life. But if you get serious about real estate and you want to do it full-time, either you look at a career in sales or something like that, or you become a capital raiser, someone that can go do bigger deals. Take that knowledge that you've acquired from markets and the relationships and now go do bigger deals by raising capital from folks. And this is one of the things that you always have to consider. What is your experience resume? What is it right now? And what is it going to be like going forward?
So I think that this is really a good question. And my answer may surprise you a little bit, but I spent a lot of time obviously coaching syndicators, and a lot of it is understanding what they're there to do, who they are. In fact, my opening presentation at Secrets of Successful Syndication is about the decisions you have to make early in your career. And one of them is, who am I? And what I mean by that is syndication is a business. And business is about aggregating, organizing, and managing resources. I watched my father, who was a high-tech entrepreneur in Silicon Valley, didn't have a college degree, was not an engineer. And what he did is he wrote a business plan, he raised the money, and he figured out all the people that he needed, experts in marketing, experts in engineering, experts in international, because it was an international business. And he had to hire all those experts. His expertise had to be knowing who he needed, raising the money, and funding the team and leading the team. And if you understand that that's what syndication is, then you can bring somebody onto the team who has the investing track record that you need. You don't need to be that person yourself. The function has to be done. The challenge that we have when we're mom and pop operators, we're A students, if you will, we think we have to know how to do everything. Can you imagine having to know how to do every single thing in a Fortune 100 company? You can't. So, Dave Zook, one of our students who's gone on to raise $1 billion of equity, not assets under management, it's much bigger than that. This is just equity, cash raised, says what he does is he invests in other people's 10,000 hours. He doesn't try to accumulate 10,000 hours of experience if he wants to learn how to do car washes or ATMs or self-storage or multifamily or resort property or energy. He does all those things. You say, well, how does he know how to invest in all those things? He doesn't. What he knows how to do is pick teams who know how to invest in those things, vet them, and then he deploys capital and invests that into those people. It's the same thing Warren Buffett does. Warren Buffett owns a lot of businesses. He can't run those businesses. He doesn't even try. What he knows how to do is pick a good management team, underwrite the business, and then put capital to work, and then just hold that team accountable to doing the job that they want to do anyway, because it's their job. So it's a mentality. If you take the right mentality, and I think if you understand and focus on what you really need to do as a syndicator, which is be a business person, not an investor, then I think that you can grow very quickly. And the people that we've coached that have figured that out are the ones that have gone on to raise hundreds of millions of dollars versus the people that are busy in the trenches managing smaller portfolios.
And as Tom Hopkins would say, when would now be a good time to get started? If you think that syndication might be a path for you, then come on out to the Secrets of Successful Syndication. You'll meet a whole bunch of awesome people, including Dave Zook, and you'll get an idea of what it takes to go bigger, faster. Hey, big thanks to all the folks that submitted questions today. Don't stop. Keep submitting your Ask the Guys questions at the website at realestateguysradio.com. You'll see it says Ask the Guys up there. And whatever's on your mind, the more general the question that you think, lots of people would benefit from the answer, the better. But we like to do this show every 8 to 10 weeks because we have such awesome listeners. We've got a great guest next week. Until then, go out and make some equity happen.
This episode of the Real Estate Guys radio show is brought to you by Paradigm Life. Powerful cash management strategies using life insurance. Learn more at beyourbank.com. Mid-South Home Buyers. Low-cost, turnkey cash flow properties in Memphis, Tennessee. Corporate Direct. Asset protection strategies for real estate investors. From attorney and rich dad advisor Garrett Sutton.
Find these and other great companies under the Resources tab at realestateguysradio.com. To learn how you can expose your product or service to the Real Estate Guys audience, call 888-489-7723 extension 4. That's 888-489-7723 extension 4. Or use the feedback page at realestateguysradio.com. Thanks for listening, and we'll see you next week right here on the Real Estate Guys Radio Show.